Good evening. Well, gold is up and silver is catching fire right now. But is it the time to sell? Are you thinking about selling right now your gold maybe or your silver? Hold on. You could be just months away from the massive revaluation, for example. So in this video, I am going to give you 3 insider insights to signals to watch before selling. The surprising reason China could push prices even higher, and why July 2025 might be the month gold gets reevaluated. Woo! Now, you want to stay to the end, and because I'll be sharing with you one of the biggest massive investors that you could make when selling. It could cost you thousands in lost gains. That would be a big mistake. Now, gold and silver is not about flipping. It's not about getting rich quick scheme. It is about long term. It is about a long-term investment. I am doing my strategy for 10 years. Yes, you heard me right, 10 years. And I'm not the only one. So grab your tea, grab your coffee, and we're going to go right into this right now. Now, what I'd love for you to do is like and subscribe. Download my I've got a free stacking tool, okay? And I've got some free resources for you as well. So, why selling now could be risky? Well, not every price spikes means it's time to sell. Look, the prices have been down for a while, for probably about a week or so, but it's starting to go up. But that's not the right time to think, let me sell. Right? So many investors, they are selling well too early. Too early. Mid-cycle spikes, for example. Gold and silver often dip before major rallies. Don't be shaken out. Don't be frightened. Listen, in 2011, there was a price spike versus what followed in 2013. Early sellers missed the upside here. So ask yourself, are you reacting emotionally or strategically? Now, China demand and Basel III, for example, let's look at this for July. Now, China central banks brought over 225 tons in 2024 alone. They hoarded physical gold, not EFTs, for example. ETFs. Why? Well, Basel III, not stable funding ratio rules could trigger a gold price reevaluation in July, for example. July the 4th, US Independence Day. Symbolism, for example, a potential moment for economic reset announcements as well. So if the dollar continues to weaken like it is, gold is one of the few assets left that isn't someone else's liability. Gold is already being made as legal tender in some countries, for example, some states. Now, I do have a video on that, so check out my playlist as well. Now, some signals that you need to look at, for example. Now, before I go into this, I am not a financial advisor. If you are seeking legal advice, financial advice, for example, regarding your finances, please do speak to the experts, because this is not financial advice. This is just me talking as an everyday person who is interested in gold and silver, who started doing and looking at this from 2007, for example. So let's get back into it. Central banks, they're slowing down. Watch for the news. Central banks are reducing their purchases. Could this indicate a cooling cycle, for example? Dollar strength, listen, it is climbing, for example, in terms of the dollar strength. People are not feeling confident. They're not feeling the strength from the dollar, for example. So it is making people fearful, for example. So if the metals are going up, for example, watch very carefully. Interest rates pivot, for example. This is another sign. A Fed rate cut can trigger a gold rally, for example. Selling before that is so premature, for example. So use these as your checkpoints, not panic buttons, for example. Now, some warning signs from insiders. Hedge fund managers are increasing gold exposure, for example. Major banks like JP Morgan, for example, forecasting that gold could, well, some of them are forecasting that gold could actually reach 5,000, yes, per ounce. So stay tuned for that, because the gold is going up and so is silver. Now, silver shortage, warning. This is continuing. It's not going to stop, especially from the mining reports, the Q1, Q2 2025, for example. Now, another sign, stock markets, over leveraged, debt is blooming, for example. Gold is becoming the last honest asset, one we can rely on, gold and silver, for example. Some common mistakes that investors make is that they sell after media hype. Ignoring taxes, capital gains can eat your profits, for example. Not investing in other assets, stable assets, missed, for example, compounding. So instead of selling, for example, consider your profit by rolling over into physical silver or rare fractional coins, for example, or gold, for example. Now, gold as a long-term safety net and silver. Think of gold as your insurance, and same with silver as well. It's not just a profit. It's not about profit. It is your insurance. Now, would you sell your house insurance? Would you? You wouldn't, would you, for example? So gold and silver, physical, is wealth, for example. So look at this not as your, how can I say it? In a reset or a digital currency shift, physical gold and silver, for example, could be your only off-grid asset. Now, remember I spoke about, if things were to go, the grid was to go down, we're facing possibly, for example, in the US, you could be facing deliveries, delays, and things like that. So check out my survival guide here. It's something that we really need to think about, or everybody should think about it around the world, from what happened to Portugal and Spain, for example. So let's look at this. So before I finish, do you think it's time for you to sell? Maybe some of you do think that, for some. But for smart stackers, July may be the most important month to hold and wait for that confirmation. But I'm in it for the long haul. I'm here for a 10-year stacking journey, minimum. So, because I'm looking at my pension, for example, so I want to make sure that I've got a backup in case my pension isn't what I think it's going to be. Some people have had a reduced amount in their pension as of this year, for example. So for me, that is a warning sign. I cannot rely, and we cannot just rely on our government pension, because things can go wrong, for example. So tell me what you think in the comments. Do you feel that you're looking at long-term safety net, or are you in it for a quick gain, for example? Do you feel that you want to be stacking for 5-10 year strategy, for example? Are you looking at this month by month to hold your